In the volatile world of digital assets, a seismic shift has just rocked the Shiba Inu ecosystem. Is this a mere tremor or the precursor to a larger market quake? Today we delve deep into the dramatic 17% tumble in Shiba Inu open interest, a move that has sent ripples across the futures market and left investors questioning the immediate future of this beloved meme coin. Join us as we uncover the data, dissect the implications, and forecast what lies ahead for Shiba Inu. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. To truly grasp the significance of recent events, one must understand the intricate dance between open interest and market sentiment. Open interest, a critical metric in futures trading, represents the total number of outstanding derivative contracts that have not yet been settled. A decline often signals a reduction in market participation or a shift in speculative positions. For Shiba Inu, a cryptocurrency known for its passionate community and often unpredictable price movements, changes in this metric can foreshadow significant shifts in its trajectory. The futures market, where these contracts are traded, acts as a barometer for institutional and large-scale investor sentiment, offering a glimpse into their collective outlook on Shiba Inu short-term value. On January 8, 2026, Shiba Inu open interest experienced a notable contraction, falling by approximately 21.11% within a 24-hour period. This sharp decline translated to a reduction of around $109.97 million in outstanding contracts. The magnitude of this shift is further underscored by the sheer volume of Shiba Inu involved, with an estimated 12,801,156,069,364 tokens changing hands in the derivatives market during the same time frame. This event marks the third consecutive day of declining open interest since January 5th, following a period of significant upward momentum that saw open interest surge by 20% at the start of 2026, preceding a 35% price rally. The immediate market reaction to this downturn in open interest was palpable. Shiba Inu price was observed trading at approximately 857 units, reflecting a decrease of around 4.16% over the last 24 hours. This dip follows a recent high of 1,017 units recorded on January 5th, indicating a retreat from its earlier gains. The correlation between the falling open interest and the price correction suggests that a reduction in speculative interest or a wave of profit-taking among futures traders may be influencing the spot market. Analysts note that such movements are common in volatile assets, where futures market activity often amplifies price trends. Beyond the futures market, on-chain evidence provides a broader picture of Shiba Inu health. The burn rate for Shiba Inu has seen a significant collapse, dropping by an estimated 82.12% recently. This translates to approximately 34.8 million units being torched in the last 24 hours. While the total burn supply stands at a staggering 410,754,186,675,427 tokens, and the remaining circulating supply is around 585 trillion, 189,769,117 tokens. The recent slowdown in burns is a point of concern for some community members. However, contrasting this, reports indicate a surge in whale transactions, with a 111% increase this week, suggesting renewed institutional positioning. This dichotomy highlights a complex market dynamic, where retail-driven burns may be slowing, but larger players are actively engaging. Market analysts are closely scrutinizing these developments. The decline in open interest, while concerning on the surface, could be interpreted in multiple ways. Some experts suggest it might be a healthy correction, flushing out over-leveraged positions after the initial surge in early January. The focus now shifts to key technical levels. The 50-day moving average, MA50, currently positioned at approximately 800 units, is seen as a crucial support level. Should a Shiba Inu successfully convert this former resistance into a strong support, it could pave the way for another attempt at the 1,000 units mark. Conversely, a failure to hold this level could signal further downside. The increased institutional whale activity suggests a strategic repositioning ahead of the 2026 cycle, indicating a long-term bullish outlook from significant market participants despite short-term volatility. The Shiba Inu community, often referred to as the Shib Army, remains a powerful force. Despite the recent market fluctuations, discussions across social media platforms continue to highlight the ongoing development within the ecosystem. The Shibarium Layer 2 solution, for instance, continues to be a focal point, with its activity supporting the broader Shiba Inu rally. Developer hints and updates, though not always immediately impacting price, contribute to the long-term vision. Notably, the Plasma Bridge is reported to be back, stronger and more secure, following earlier challenges. Furthermore, the K9 finance deadline for users impacted by the Shibarium Bridge incident, set for January 6, 2026, has passed, bringing a sense of closure to that particular event. Looking ahead, the short-term forecast for Shiba Inu over the next month hinges on its ability to consolidate above the 800 units MA50 support. A successful hold could see it retest the 1,000 units level, potentially removing another zero from its price tag. Key breakout targets are identified at 910 units and 950 units. For the long term, over the next 3 years, while the community often dreams of Shiba Inu reaching $1, analysts maintain a more grounded perspective. The focus is on a wider accumulation range as market participants reassess long-term positioning, with institutional flows signaling a strategic move ahead of the 2026 cycle, suggesting a potential for significant growth over the coming years. However, every investment carries inherent risks, and Shiba Inu is no exception. The recent macroeconomic climate, with growing bets on Federal Reserve rate cuts, introduces a layer of uncertainty. Upcoming economic data, including weekly initial jobless claims and the Bureau of Labor Statistics non-farm payrolls report, could significantly influence broader market sentiment. While institutional interest is a positive sign, the meme coin market remains highly speculative and susceptible to rapid shifts. Investors should exercise caution, conduct thorough due diligence, and be prepared for continued volatility. The path to sustained growth is rarely linear, and Shiba Inu journey will undoubtedly present both opportunities and challenges. As the digital tides turn, Shiba Inu finds itself at a pivotal juncture. The recent open interest tumble serves as a stark reminder of the market's dynamic nature. Yet, beneath the surface, institutional interest and ecosystem developments paint a complex picture. The Shib Army watches, ever vigilant, as Shiba Inu navigates these turbulent waters. Will it reclaim its momentum and surge to new heights, or will caution prevail? Only time will tell, but one thing is certain. The story of Shiba Inu continues to captivate, evolve, and challenge expectations. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.